Yeah, guys, welcome uh, to my 7 days boot camp. Oh, I want to congratulate you for actually choosing this course and desiring to learn this particular strategy that can actually make you extremely wealthy. If you can pay attention, then you take notes during the course of this boot camp, then you will do well and you would actually be extremely profitable in trading the financial market. Now, this strategy actually works on any pair, on anything that has buy and sell. So you can trade it on indices, on commodities, on cryptocurrencies, on volatility pairs, and in forex. So these are the actually things, and also in shares and some other assets that has buy and sell. So far it has market pattern and candlestick, then you can actually trade this. So let's quickly go through what we'll be discussing. So in day one of this particular uh, teaching, so I will be teaching you what we mean by ICT order block, right? Sorry, order block, right? Is that ICT order block, right? ICT order block and institutional order flow, right? So at the end of this 7 days teaching, I actually will tell you that you'll be so much confidence in the way you trade and in the way you see the financial market, right? Because you'll be trading based on uh, what the market maker and the liquidity provider, what they are actually doing in the market. So you'll be able to trade based on their line and in their own direction. You know, many retail traders, they've been taught in different concepts in the market, and it's actually the teachings that they have been given is to the end that their money will be taken away from them. But in this particular, we'll be revealing the secrets of the market maker and the liquidity provider to you so that you will be able to know what they're going to do at time and follow their direction. Now, you will not be able to trade against their trend because the market maker trend is actually the true trend that we should follow. Right. So, in this particular teaching, I will be introducing you to the ICT order block and the institutional order flow. Right. So, what is ICT order block, or what is order block? What is order block? Order block uh, is actually a particular zone where the market gets to and reverse. So, for example, if the market has been going higher, right? The market has been going higher. The price of the market has been going higher, making a series of higher high. Like the market has been making a series of higher. Then you get to a particular place. We call this thing smart money. So when the market is actually trending higher, so there is a particular zone where the liquidity provider will actually get to for the market to actually reverse from. So this is where liquidities are. This is where liquidities are. This is where liquidities reside. So that is where the market will actually reverses and actually take away the money from those people that have been selling, that have been buying this particular pair, right? So what is now the concept of ICT order block? So order block is a zone where the market actually reverses. It's a zone where the market reverses. So this that is actually the candle that make us to know that the market maker or the liquidity provider are up to something. That is, they are about to reverse the market away from the retail traders and some other investors that are actually buying the pairs. So how does the order blocks actually looks like? How do we identify an order block, right? So in a bullish market, what we are looking at is It's either we are looking, we have two types of order blocks. We have two types of order block. We have two types of order blocks. We have number one, we have bullish order block. Bullish order block. So we are going to abbreviate order blocks to be OB. So bullish OB. Number two, we have bearish OB, right? We have bearish OB. So based on my findings, I discovered another types of order blocks, which I refer to as, right? I refer to it as a trapped or a trap order block. Trap order block. Now, but in this course, I will be introducing you to bullish order block and a bearish order block. Later in the course, where probably when you settle down in this course and you have mastered this course very well, then I will be introducing you to what I refer to as a trap order block. Right. So what is order block? Just like what I explained to you earlier on, that order block is actually a zone where the market actually reverses from. It's a zone where the smart money actually taking the money away from the retail traders and some other investors that are actually trading, right? So let's look at this. Let's look at this. Now, an order block, right? In a bullish scenario, what will make a candle an order block is this. When we have a bullish candle, right? This is a bullish candle, right? So if we have a bearish candle that actually closed below this bullish candle, we have a bearish candle that actually closed below this bullish candle, then this bullish candle now becomes our order block. Now, this bullish candle can now be called a bearish order block. Why? Because a lot of people are buying. A lot of people have been buying. They've been buying this pair, right? They've been buying this pair. Can you see this? They've been buying this pair, right? Buying, buying, buying. So when it comes to this particular zone, then we now have a candle, a red candle that closed below this bullish candle. So anytime we see a bearish candle close below a bullish candle in an uptrend, right? When the market is buying. So that informs us that this is a bearish order block. That shows in this particular candle here, this green candle that we have here, right? We have a lot of sellers in there. A lot of sell orders has been placed there. Just like what I said, that it is called an order block. That should be a block of orders. That should the orders that are in this block are sells, right? So when the market got to that particular zone of price or the zone of the market now reverses. So this now shows to us that this particular zone, right? Because we use candlesticks to actually know what is actually happening in the market. So this particular zone is referred to as the bearish order block. So this particular candle, is now called a bearish order block. Now, let me repeat that again. Anytime we have a bullish candle, right? We have a bullish candle, right? Then if we have a bearish candle, irrespective of when that happens, right? We're having a series of bearish candle. This is a bearish candle, right? This is a bearish candle. It did not close below it. This is a bearish candle. It did not close below it. This is a bearish candle. This is another bearish candle. Until we have a bearish candle that we actually close below this candle, this green candle here, right? We cannot call it a bearish order block. So what will now make it a bearish order block What will make it a bearish order block, this candle here, is when we now have a red candle that closed below it. So this particular candle here, this candle here, now makes this candle qualify to become a bearish order block, right? Are you guys following? So it makes it to be qualified as a bearish order block. Now I'm going to be showing you in charts and for you to actually get the scope of what I'm explaining. So that is what we mean by a bearish order block. It is when we have a red candle close below a green candle. So this makes it to be qualified as a bearish order block. Listen to that again. What makes the criteria of looking for a bearish order block, it is when a red candle close below a green candle. So that green candle now becomes a bearish order block. Now, for a bullish order block is actually the reverse of actually what I just explained. In a bullish order block, we have a bearish candle. The market has been going down, right? The market has been going down, right? We have been having a bearish move. Now, in these types of markets, when we have another candle that closes above this, right? When we have such a candle like this, then this last bearish candle now becomes a bullish order block, right? It now becomes a bullish order block. That shows there are a lot of buyers in this particular zone, right? That actually makes this market to actually reverses like this. That shows there are a lot of buyers, a lot of buy orders in this particular zone that makes this zone reverse like this. So this now become a bullish order block, right? Don't forget what I told you will be the criteria that shows you must have a bearish candle, a bullish candle, close above a bearish candle. So it's we now make it to be qualified as a bearish order blocks. So this is the reason why we have a bearish order block. Now, let me now quickly show you the examples in the charts, right? So let's quickly go to the chart. See the example. Now, see this, you can actually locate it anywhere. You can locate it anywhere. Now, look at this bearish candle here. Look at this bearish candle here. Look at this bearish candle. Can you see this last bearish candle? Then we have a green candle that closes above this candle, right? When you mark that red candle, then we have a green candle that actually closes above it. So this make our box a bullish order block, right? We see another red candle here. Can you see another red candle? Then we have another green candle. This green candle that actually closes above it. This red candle here. Then we have this green candle, a bullish candle that actually close above it. So this now make it a what? A bullish order block. So this is a bullish order block, one. This is another bullish order block, two, right? So let's look at another bullish order block. Now look at another red candle. We have a bullish candle close above it. So this is another bullish order block. This is another red candle, right? We have a green candle that close above it. So this is another bullish order block. Another bullish order block. Can you see that? Another bullish order block. This is another bullish order block. Can you see this? Because this candle actually closed above it. That's another bullish order block. So that is how you mark a bullish order block, right? That is how you mark a bullish order block. You mark a bullish order block when you can locate a last red candle that actually closed, that has a bullish candle that closed above it. So you mark a bullish order block, right? Hope that is taken. So let's look for a bearish order block. Now, in looking for a bearish order block, don't forget the criteria. I said you must locate a last bullish candle that has a bearish candle closing below it, right? So let's locate such. This is an example, a bearish order block. Can you see this? This is an example of a bearish order block, right? So this is an example of a bearish order block. Why? Because it has a red candle that actually closes below it. Look at this candle. Do we have a candle that actually closes below it? Yes, this candle actually closes below it. So this can be marked as a bullish order block. But let's look at the nearest green candle. Now, this is a bearish order block now, right? This is a bearish order block, right? Right? That's a bearish order block, right? This is a bearish order block. Why? Because a green candle, a red candle actually closes below it, right? This is a bearish order block here, right? So that is how to mark a bearish order block, right? So this is the concept of order blocks. That is how to identify order blocks. Now, let's now quickly look at what is now the function of order blocks. What are the functions of order blocks? What are the functions of order blocks? Order blocks serve the function of support and resistance. It serves the function of support and resistance, right? So what is the meaning of this support and resistance? Your bullish order block served the function of a support, right? And a bearish order block serves as a what? A resistance, right? So price will always find a support, right? So after we have a bullish order block, for example, let's say we have a bullish order block. This is a bullish candle. So this now makes it a bearish order block. Now, what are we now expecting to do in this particular scenario? We are going to box this particular bullish order block. We are going to box this particular block, this particular candle, right? Right? So we are going to box it like this. So then we will now be waiting after it has been created as an order block. Then we will now expect price to trade back into it and find resistance in it. Then price will now trade back, right? We want price to trade back into it after this has been created. So we now box it. So we will now wait for price to trade back into it to find the resistance in it, then actually now get rejected. So this is now a bearish order block, right? So for a bullish order block, when we have a bearish candle, right? So we locate a bullish candle that actually close above this bearish candle. So when we have a bullish candle closing above a bearish candle, this now becomes our bullish order block or our support. So we will now do what? Box this particular bearish. Let me use another color for that box. Let me use blue. Let me just use another color now. Now, you are going to box this. So this is going to be your support, right? So you are now expecting price to do what? Price to trade back. After price has actually traded away, you look for price to actually trade back into it, find support in it, then price should now do what? Price should now trade away from there. Can you see that? So that is the function of order blocks. So anywhere we find our order blocks, we are looking for it to serve the function of a support or a resistance. So a bearish order block serves the function of a what? Of a resistance, right? Resistance, right? Then bullish order block serve the function of a what? Of a support, right? So that is the concept of bullish order block and a bearish order block, right? So let's now go into the concept of order flow. What is the meaning of order flow? Okay, before then, let me quickly show you that on the chart, what I just explained. Now, look at this. We have this candle formed. Now, look at this. This is a bearish order block. Can you see? I mean, this is a bullish order block. Now, look at how price now trade back into it and find support in it. Price trade back into it and find support in it. Then price trade away. Look at another example. This is our bullish order block. Look at how price trade back into it, find support in it, then price now trade away, right? So this is another bullish order block, this particular little doji candle here. Look at how price trade back into it, find support in it, then price trade away, right? So that is the concept of order blocks. They are support and resistance. Now look at this bearish order block. Can you see this bearish order block? Price trade into it, fight a resistance in it, then price drop back. Can you see this? So that is the function of order block. You can actually look for some other examples of that, where price will find the resistance and actually price will drop. Now, let me give you another example where price find the resistance. Now, this is a bearish order block, right? Can you see this? A bearish order block. This is a bearish order block, right? Price trade back into it, find the resistance in it. Look at how price drop. Can you see this? So that is the concept of order blocks. Now, what is now institutional order flow? Institutional order flow is found when price is making a series of either bullish order block or bearish order block, right? For example, in this case, we have a series of bullish order block, 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 bullish order block. When market is creating a series of bullish order block, right? When market is making a series of bullish order block, then we can actually say that there is a bullish order flow, right? We can now say that there is a bullish. We can now say that there is a bullish order flow. So that is the concept of the order flow when we have order flow in play in the market, right? So that is bullish institutional order flow. Now, when market is making a series of a bearish order block, just like this, as you can see, uh, let me just try to mark this. Now, look at it. This is a bullish order block. This is another 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 bullish order block. This is bullish order block. Now, we can say that the market is in an uptrend or is in the bullish. So our uptrend is going to be called bullish order flow. Is in a bullish order flow. Can you see this? A bullish order flow, right? right? So that is bullish order flow, right? So in a bearish order flow, the market will be making a series of uh, bearish order block, just like in the examples I just gave to you. The market will be making a series of bearish order block, right? Bearish order block when we are finding getting a series of. Let me just give you that example. Now look at this example. This market is creating a series of bearish order block, right? This is a bearish order block, a bearish order block, a bearish order block, a bearish order block, right? So in this type of market, we are going to say that the market is in a what? Bearish order flow, right? So the market is creating a series of bearish order block, a bearish order block. This is another bearish order block, bearish order block. Can you see this? Bearish order block. So this kind of market is a bearish order flow, right? So, or a downtrend, a downtrend. Now, in our method, in a bullish order flow, you are only looking to buy, no selling. You are just waiting for price to trade back into that bullish order block, then for you to buy and trade away from it. You are not going to look to sell. In a bearish order flow, you are not going to look to buy. You are only looking for opportunity to sell. Now, what are you waiting for? You are waiting for price to trade back into this bearish order block and drop. Price to trade into that bearish order block and drop. Price to trade into back to this bearish order block and drop. Price to trade back into bearish order block and drop. That is what you are looking out for. You are not looking to buy. You are only looking to sell. So in a bearish order flow, you only look to sell, and in a bullish order flow, you only look to buy. So that is the concept of order flow and order blocks that I would like to explain to you. Right? So your assignment, your first assignment, your assignment is uh, you make a card, you make a card just like a flashcard for you mark, right, 20 charts showing bullish order block and order flow. So a series of bullish order block, which is actually bullish institutional order flow, and bearish order block in a bearish order flow. So you are marking 20 charts showing bullish order block in a bullish order flow, right? Then 20 charts showing bearish order block, different series of bearish order blocks in a bearish order flow, right? So that is your assignment. So 20 charts each. You are going to mark that and actually submit to me, right? So that is your assignment and it should be submitted to me in due time for you to proceed to the next phase of the course, right? So thank you for joining in. I will see you in the next module.